Hi there, Serial Trader here. First of all, happy Father's Day to all the fathers out there. Now let's check in with the major US indices, and we'll start off with SPX. So now I've labeled this as the peak of this small degree wave 3, but you can certainly put it here instead. But directionally it doesn't make much difference, so I'll just leave it to where I originally put it for now. And it looks like it's possible that we have a smaller degree wave 4 in place, and now we're coming off quite strongly from that little dip down, and that we could be heading up in a smaller degree 5th wave to complete our larger 3. Okay, and then at that point, and by the way, I'd like to see that larger 3 take out this resistance level on SPX, which is 2801.90, so just above 2800. Then at that point, after we have this complete 5 up, it's currently labeled as a larger 3, we'd expect that larger 4 to play out, and then that would be kind of the next major swing setup to catch this larger 5, which should go to new all-time highs, if this is the correct interpretation. And that possibly could end an even larger degree, 5 waves up, at which point there might be a significant pivot in the market and another big correction or even a crash. But that's getting way ahead of ourselves here. Just focus on each individual wave at a time and go along with it. But well, let's see here. Back on this hourly, zoomed in a bit here. So if you caught that dip down there, that was probably a good entry. I didn't actually catch that. I was preoccupied doing something else. So at this point, unless I see like a real small short-term corrective pullback that holds above this high, I wouldn't really want to enter here necessarily. But we'll see. That's my game plan for now. So still expecting some near-term strength on SPX, although also looking for a larger pullback once it completes. Before we go to the Thinkorswim chart, I'll just show the NASDAQ here. We haven't shown this for a while, if at all. So NASDAQ, similar to SPX as far as the big picture, although it had some differences as well. So we had our major peak there in January. We had that initial leg down in February, or ending in February. And that was the low of the move. And then we actually traced out a triangle similar to what we did in SPX, except it was a running triangle where this wave B up made a new price extreme, okay? And then we had our C, D, E. And now, from the low of E, we actually have a 1, 2, 3, 4, as I'm counting it. And it looks like we're getting extended in this 5th, which could possibly be the end of a larger 5. So NASDAQ, looking at this, actually looks a little toppy. Not to say this can't continue extending higher. It certainly can. I mean, it's kind of a fool's game to try and, at least from a trading perspective, call the end of an impulse wave, because you could get it wrong and maybe we just have a 1, 2, and this is all just part of an extended 3rd, and then you have a 4 or 5, and so on and so on. But just looking at this, it does look quite toppy. It's overbought. And you can count 5 up cleanly. And within the final wave, or at least what's currently being depicted as the final wave, you can also count 5. So let's, maybe the hourly chart. Hourly chart would be appropriate. So yeah, within this 5th, let me just get out the tool. You can easily make the case that you, well, even if, sorry, let's just say 4 ended here or something. Really, you can make a lot of different, this is quite a corrective sideways pattern, so you can label it a variety of different ways, but that's not important. So you could go 1, 2, 3, 4, and then working our 5th, and let me just drop the degree so this makes sense here. You could definitely make the case for something like that, right? So when you can see all this clear 5 up and then 5 within 5, you should be, and then overbought on that we'll get back out here on that daily chart. When you can see something like this, you should really tighten up your stops if you're long, or if you're looking to get long, this is not an entry point at all. This is a terrible entry point in my opinion. And if you're in a good position and you've made a lot of money, if you bought in anywhere lower or even lower down here, not a bad time to at least take partial profit or even close the position depending on your style there. I know I have a friend who I'd recommended, not right near the bottom, but somewhere in this lower range here. And he's not a trader or anything, but just a regular guy. And he was wondering what he should do with some money he had. So I said, well, maybe buy a fund. And I recommended a certain fund to him. And it was a fairly tech-heavy weighted fund, so quite a bit of correlation to the NASDAQ. It was a higher beta fund, so if things went up, it would certainly outperform the broader market, you know, like in a benchmark such as the S&P 500. So he went ahead and did that. And he's quite happy with his gains now. He's up, I think close to 10% in about a month. And he's telling me, well, what should I do? What should I do? He's kind of getting antsy about it. And I said, well, you know what? 10% in a month. And now we have this clear 5 up and then a 5 within 5 on the NASDAQ. It's not a bad idea just to get on the sidelines now. Just sell it. I mean, for a regular guy, he's already made a return that's decent for, you know, an annual return. And he's done it in a month. So I just instructed him, close it. And then at the very minimum, you're going to have a decent pullback here, a corrective pullback at some point. And if it does in fact look corrective and find support, you can just get you back in there. And if this thing just falls out of bed and this is the final fifth within a multi-year impulse wave and we come crashing down, you'll be very happy you stepped out of the way of that too. So yeah, he followed my advice and I think it'll end up working out quite well for him. But not to go off on the side too much there. So we'll go to the Thinkorswim charts now. And so SPX on the candlestick chart, on Friday there, we had a good dip down, but as you can see, quite a rejection of those lower prices, and we actually put in a bullish hammer. And I'll point out we still closed well above the T-line, even though we breached below it intraday. So closing action, again, just an example of how important it is, how much more weight it should have than intraday action. So I would say, based on our SPX wave pattern here, it looks like it could be complete and coming up in a smaller fifth. And we have this bullish hammer candlestick. I'd say some further strength near term is likely on SPX. But certainly if you did get long or you are long, your stop should now be just below 27.61.73 here. With the low of this dip down on Friday. Okay, well, we'll go on to the NASDAQ, or sorry, the Dow. And the Dow is similar. Again, still just showing a little more relative weakness, although the actual pattern is, similar in shape. Had a bullish hammer, a rejection of those lower prices. Again, I'm not really too fond of the Dow for trading. It's just for complementary analysis, that's all. But if you are long, a Dow fund or something, a Dow ETF, I think DIA is the liquid Dow ETF I'm familiar with, the diamonds, DIA. You'd put your stop just below that low. And okay, NASDAQ composite. Now we already know where we are on our wave chart there, but just from a candlestick perspective, there's no actual sell signal here yet. And in fact, just on Thursday, we made another new all-time intraday and closing high. So, I mean, this is not a short here. If you want to actually take a bearish position, you need to see a sell signal, and then more ideally, a sell signal and a close below the T-line, such as a following 3-year bearish engulfing or whatever sell signal it produces, if it does, and then a close below the T-line, and then even more ideally, have that 3 EMA cross below that 8 EMA. And then even more ideally than that, break this support level down here at 75.95, okay? So just below 7,600. This is not a short yet, but it's on my watch list, if you will, for a bearish play. And I'd be probably looking to play it with QQQ puts. And but we're just not there yet. Still watching. Okay. Let's go to the volatility index. So VIX still very subdued, but it looks like it's really at the lower end of its range. So if you want to be a little protective, say you have some long positions in the portfolio, if you have a portfolio, and you're a little concerned about some near-term weakness or even a larger pivot, you can buy some protection in the form of VIX calls. And I'd recommend buying them maybe well, at least a month out, if not more. Because VIX at these low levels, it's likely you'll get at least a short-term spike up. And if something really bad happens, like the NASDAQ peaks and has a major pivot, comes crashing down, well, and then obviously other markets will follow suit. If that happened, your VIX calls could do extremely well. So you could risk a small amount of money on some VIX calls as protection, and that small amount of money could actually become, disproportionately large amount of money. Because, I mean, if you go look at the VIX calls, and we'll do that here. VIX and expiration date. Let's do the July's, so 30 days from now. If you look at if you want to play it like a at the money or an in the money call, they're still fairly inexpensive. Now VIX went up to what's this level here? Almost 20, and that's just the first kind of resistance level VIX would be hitting if we have a spike up. So let's say it did that. So let's say you bought the VIX 10 calls, 10 straight calls, which is well on the money here, and you paid I don't know, $370 for it, and VIX went to 20. Okay, well, what would they be worth now? They're 10 strikes. VIX went to 20. Well, at the very least, they'd be worth 10. Okay, 20 minus 10 is 10, so that's the intrinsic value that the call would have. And you paid under 4 for them, so now they're 10. I mean, that's pretty excellent, almost a triple. And actually, they'd probably be worth, especially if it happened well before expiration, they'd probably be worth well above their intrinsic value. Maybe they'd be worth 22 or 23 or something. So that just gives you an idea of what kind of performance these would have under even a modest increase in VIX, relatively speaking. So keep that in mind. I'm toying with the idea of just trying to catch a little VIX spike up if I see a sell signal short term on the NASDAQ or the S&P or both or whatever. But no positions yet. But I'm just exploring the idea, keeping my eyes on things here with the VIX calls. Anyway, that should be good for now. Certainly next week, wouldn't be surprising at all to see some further near-term strength. And that even goes for the NASDAQ. Like I said, I mean, there's nothing actually bearish happening yet. In fact, we're just on the cusp of, continuing to make new highs again. Wouldn't be surprising at all if we had, another up week or multiple days of positive trading. So really nothing to speak of here for an entry on this stuff short term. But definitely some opportunities shaping up here. All right. That should be good for now. Serial Trader signing off.